Friends no more. Facebook shares plunge another 6% with quite a bit of action after hours to a record closing low as early investors get the green light to dump their stock for the first time since the float 3 months ago. The social network has now lost almost half its market value, down nearly $50 billion as investors fret over its failure to come up with a plan to curb the slowdown in revenue growth. And there could be more pain to come in November when many Facebook staff get to cash in their stock awards for the very first time. But the German Chancellor Angela Merkel has given global shares a boost, it seems. Visiting Canada's Prime Minister Stephen Harper, she gave strong backing to the ECB President Mario Draghi's commitment to doing whatever it takes to save the euro. Merkel says the prospect of the ECB buying Spanish and Italian bonds is completely in line with the approach of Europe's political leaders. Not everyone's convinced, though, as you can see here. Finland's foreign minister telling the media, this is the Daily Telegraph, that Helsinki is preparing for a breakup of the euro. Let's talk about all of this with Will Hobbs over at Barclays. Morning to you, Will. Is this anything new in the Telegraph? We've got a foreign minister coming up with some pretty strong words, but is this going to spook the market?
I don't know. It's difficult to say, really, isn't it? I mean, I think, we've had this sort of divided front from Europe for some time now, haven't we? I think we're all getting used to it. And for our perspective, Germany has been softening its stance almost imperceptibly for some time now. And perhaps they're being helped a little bit by, slightly softer economic data at home, which is forcing them towards. But also, the ECB's latest proposal is very much, as Angela Merkel and you noted just now, is very much in line with what Germany had been hoping for. People who are, or countries that ask for bailout money, should be subject to strict conditionality. So this is a good thing for the Eurozone, I think.
I mean, in your view, as an equities guy, would ECB buying tighten peripheral spreads enough to sufficiently ease the crisis, at least in the short term?
I think it's the important thing is the threat. If you are a bond trader and you are looking to go short on Spain, it's much harder to do so knowing that the ECB balance sheet potentially stands in your way. And so, yes, I think it is. I think it's a very important step for equity markets.
What's going to happen? I mean, we've clearly seen such a decent run-up over the last few months. Some people are calling an almighty crash in September, October. As an equities guy, I doubt that's what you're saying. You're going to temper that a little bit, right?
Yeah, I mean, we certainly expect a bit of a pullback. I mean, we've had a very good run on European and US equity markets. I mean, Europe has actually outperformed US over the last month, hasn't it? But I think, we've got a lot standing in our way. We've learnt to be, wary of the Greeks, whether they bear gifts or not. And, we've got several other big things for the market to digest in between then. So, it seems wise to expect some kind of pullback. But medium term, we still like the prospects for equity markets. We still think they look cheap relative to other asset classes and actually cheap on a medium term in absolute levels.
What specifically do you like in this market?
In terms of sectors, we actually quite like US banks at the moment, which sounds like a strange thing to like. But with the property market coming back to life and lending stats starting to look quite good, it's quite interesting that you're seeing US banks standing on their own 2 feet in funding terms. Certainly, there are some threats in terms of sort of litigation and political risk.
So, are you buying the US banks?
We have an investment idea on the US banks. Yeah.
Okay. Well, we'll talk more about that. Will Hobbs from Barclays. Other world news on Reuters this morning. Police in South Africa say at least 30 people have been killed now in a crackdown on striking miners at a Lonmin platinum facility. In an incident filmed by Reuters television, police opened fire on the strikers at the plant 60 miles northwest of Johannesburg. The White House reported to be studying plans for a release of strategic oil reserves to hold down gasoline prices and prevent high energy costs, undermining sanctions against Iran. Sources have told Reuters the administration is dusting off old plans, but pump prices usually fall in any case after September's Labor Day holiday. The diplomatic standoff between Britain and Ecuador looks set to ratchet higher. Ecuador claims the UK has threatened to raid its embassy in London after Quito granted asylum to WikiLeaks founder Julian Assange. He's been holed up in the building for the last 2 months. And a Russian judge due to deliver a verdict today against 3 members of the punk group Pussy Riot. Their trial for staging an anti-Putin protest in a Moscow church has provoked an international outcry. The state prosecutor is demanding 3-year sentences. Right, let's get to Asia. And Japan is to send back 14 Chinese activists detained after some of them landed on a disputed island. Reuters' Tara Joseph joins us from Hong Kong. Tara, any sign of the tension, that this tension is going to be diffused, or is this going to get worse now?
Well, diffused for now. They're sending those activists back as we speak. They're due back in Hong Kong later today. It is diffused by now, but this episode does remind of two important things. One, World War II feelings still fester in this part of the world, and also it's about China's